Hey guys, welcome to another video. In this video, we're going to be talking about how we caught gold shorts using Zoro. Zoro, right? So in this one, we're going to be talking about quite a few things. We're going to be talking about a lot of things actually. We're going to be looking at price from 3 or 4 different angles. Okay. And we're also going to be looking at something really, really interesting that I have already gone through on my YouTube channel. And for those of you watching, if you did put in the work, you would definitely be able to see this. And for those of you that are always skipping the video after watching 1 minute of it, well, it shows why you're not getting anywhere in your career. It is what it is. I mean, if you are on YouTube going through so many people's videos and you're just watching 1 or 2 minutes of it, it explains your gap. It basically explains the gap in your knowledge, sorry to say. But for those that are watching, for those that are actually interested in this, and for those that actually want to get ahead, this one is for you. Okay, now on gold, you can see over here that the NY session bias was bearish. Okay, the NY session bias was bearish. You can see there's a lot of stacked liquidity up over here. What will happen to this stacked liquidity? Well, first of all, if you take a look at these lows right there and this low right here, that is stacked liquidity. So if I were to draw it out for you, okay, it's this and this. This is the ultimate stacked liquidity. When price takes that out, and then when price breaks above this candle, that candle becomes your order block. And what happens when a candle becomes a bullish order block? You're expecting price to do what? You're expecting price to react from it, right? Looking at this from a higher time frame perspective, up over here, we have stacked liquidity on the buy side, and down over here, we have stacked liquidity on the sell side. Now, keep in mind that the bias is bearish, as mentioned over here, okay? We're looking at this framework and we're saying, okay, we have that bullish order block on the 5-minute chart. We want to see price come drop into it and then go up. Okay, we want to see price come drop into it and then go up. And from there, you're looking for price to reverse. Looking at this, we know that the bias is bearish. So from the earlier slides, I showed you that the bias for the New York session was bearish. Now, if you guys remember from early on in this year, I'd say January, February, we were looking at doubling theory as per the macro projections, whereby I could have essentially predicted when a buy will happen and when a sell will happen. And I have an indicator for this. Now, with this indicator, if you combine it with Zoro, you'll know that if Zoro says that there's going to be a sell, what you can do is, in the New York session, you can simply ignore these green colored arrows and just focus on the red guys right there. You can see how they predicted the sells very nicely. Okay. And on this day, right, the London session was predicted to be bullish. And you can see, you can forget about the red arrows in London and you can focus on the green arrows in London causing this move up. Same thing over here. Okay. That is what the macro projections will get you. But now what if we take a look at the doubling theory alongside with the power of 3 expansion, as I have been explaining in the earlier YouTube videos, or rather in the updated YouTube videos. That's going to be very interesting. So let's take a look. The Asian session, or the first interval of the day, was an accumulation. And this was manipulation. So how do I distinguish between accumulation and manipulation? Well, simple. If we take a look at what the stack liquidity is, in this case is this one, you want to see what price leg or what candle took that out. And in this case, was this guy right here, the one with the massive wick. Okay. If we understand that a wick closing back inside is a rejection block, we know that we can consider that to be an order block / rejection block. And that is exactly where price came for, or came to, in order to continue with the distribution. Your sell would be here, and your take profit would be down here on the stack liquidity pool at the sell side of things. Okay. Now, breaking this down on the lower time frame using my fractal dealing range, in this case, my London fractal dealing range, you can see that as we broke down here, as we closed down below here, we have my London fractal dealing range being broken to the downside. So if it's been broken to the downside during a distribution phase, what will price do? Well, price will revisit the London fractal dealing range right there and then continue with the sell. Because my fractal dealing ranges provide a true reference point in price. No theory, I repeat, no theory can tell you with a guarantee that a certain range is going to work or not. Mine does, because mine is no longer a theory. Mine is a principle of the marketplace. These ranges will never fail. If you don't believe me on that, if you're going to give me some shit on that, please take 3:10 to 3:30 Eastern Standard Time. Go ahead and backtest it. Just go ahead and backtest it. See what happens. So over here we have an external range D marker going into the London fractal dealing range. And that, my friends, is your sell. Okay. But the reason why I'm saying that my concepts belong under the umbrella of the truth of the marketplace is because they share some similarities with ICT, with his concepts itself, right? ICT uses dealing ranges. Well, I have a dealing range. I have 10 dealing ranges, in fact, that price is going to reference all of the time, 100% of the time. I look at liquidity the way ICT looks at liquidity. Well, of course, because I learned from him as well. What's that? Stack liquidity pools. I don't look at any other damn thing. I don't look at any other liquidity pool because they are not liquidity pools. Okay. If you see a low, like this, that is not liquidity. Hell no. It's not. That's just a low. Yeah, there's liquidity in it right there, but it's not liquidity in the way that your YouTube, the boys and girls are training you to think. It's not. This is liquidity. See that reaction? Huh? This is liquidity. This is liquidity. This is not liquidity. It's not. This is liquidity. By understanding what liquidity is, you'll be able to accurately see what the actual change in the state of delivery is. Okay? No theory can tell you what liquidity is and isn't. Liquidity is the truth of the marketplace. And if you understand the logic of liquidity, you'll know exactly what liquidity is. You'll know exactly which candlestick you should be using. For example, look at this relative equal high stack liquidity. What candle took it out? This one. So when price closes above this candle, again, price should find some natural support right there. That is the truth of liquidity. There's a logic that goes on behind these candlesticks that ICT is not teaching. And I'm telling you for sure, no one else is teaching this. ICT wants you to find it out by yourself. But when gold is given, you guys don't appreciate it for what it is. You go behind everyone that's repackaging ICT content, putting the same damn market maker model, this market maker model, that fair value gap, this fair value gap, that. I mean, I am guilty for doing it, but not anymore. I'm expecting you guys to know it. Okay. So watch out for my YouTube channel. Things are gonna get really sexy out here. All right. I mean, that said, I hope you found some insight in this video. If not, just go back, just come back, rewind, look at each and every one of these slides, relate it to what I'm saying, and you'll definitely be able to see something. All right. So if you guys are interested in Zoro, the link is down in the description below. Once you do subscribe to Zoro, do send me a message, and I'll also give you access to the macro projections so that you will have guidance in your buys and sells alongside Zoro's prediction. So with that said, I'll see you in the next one. Good luck and good trading. Bye-bye.